Ladies and gentlemen, welcome to another edition of In the Pit with Lobo Tigre, the independent speculator. If you enjoy our content today, please hit the subscribe button, share it as far as you like, spread the word. We appreciate it all. Our victim of the day is John Mirko. He's the CEO of Rokmaster Resources. Rokmaster has a really interesting sort of re-envisioned story here. And John, rather than tell it for you, why don't you go ahead and give us the overview, and then I've got questions.
Okay, thanks, Lobo. Yeah, I've been involved with this project since we optioned it in later in 2019. It's a tough project. It's got some warts on it. It's in a tough area in British Columbia, mountainous region. Of course, it's an area known for recreational and environmental people are all over the place here. We do have First Nations. Most importantly, it is been under the radar because of the metallurgical issues it's had since it's been discovered over 100 years ago. A lot of parties have worked on this, major mining companies, famous people like Ross Beatty, British Petroleum, Selco, Noranda, Placer. Quite a few people have looked at it because they've seen that it has a lot of size potential. To build ounces is something that's fairly simplistic in our world because of the nature of the zones. And so I'm involved in it because of the blue sky, Lobo. This is why I'm here. I don't really need to build another mine. That's a very difficult thing. I've done it before, and that's why I have no hair. So, you know, and I've got some people involved with me on the geology side who are only interested in that. They're not here because they need the work. They're interested in the potential of the place and would like to see the success in that department happen. One thing, back right up to the metallurgy. So the Ross Beatty and Pan American and Equinox had it for 10 years. They sub-optioned it out, various parties, to get some help. A lot of good work was done on the metallurgy. Drilling was done, underground work was done. Every drill program that was done on this property is always added to the resources, or what in those days were called resources then, historically. Nobody's ever run into a brick wall on this. They've always added to it. In the metallurgy, that was a brick wall for most guys. Test work involved in the late 80s, evolved in the late 80s and the 90s to include pressure oxidization of the escapulated gold inside arsenopyrite crystals. A lot of it is in solid solution, so it's not on a crack inside that mineral. It's actually in it. So you can use various methods to get at that. You can roast it, which these days wouldn't enjoy a very good reception from anybody because of the potential for pollution. You could oxidize it by using pressure ox or bio-ox. Bio-ox, we don't want to spend much time on that because you need a lot of room for lots of tanks, and it's a little bit tricky to keep the process going at different times. Pressure ox is proven. There's about 30 operations in the world now that are using pressure ox. Autotech and Metso have joined up. They've given us some good work for free. They've given us some good quotes. Quite simplistic, except it's expensive. Capital cost is high, operating cost is high. Recoveries are high. We're in an area with cheap power. We've got offerings of oxygen plants. We've got a limestone mine right here on the property. So we have all the components we need. The biggest problem with POX is, do you have enough gold to justify building that kind of a plant? So the previous operator on the property, who we've optioned it from, is a Chinese company called Huacan International. They ended up owning it because they were doing equity funding in Merit Mining, a Vancouver junior mining company run by some smart geologists and mining engineers, but they were having a tough time in the market back at the time, 2008 and 9. And after the market crash. And they got a lot of support from Joaquin, but Joaquin wasn't that familiar with the setup in the venture capital market. And every time they wanted to do a financing, they ended up taking most of it themselves. And I don't think that was their original plan, but by default, they ended up owning 90% of the company and got tired of paying the listing fees and took it private in 2013. They did a lot of great work. They did their last drill program in 2012, doubled the ounces that they'd come out with in their previous.
Sorry, John. Let me jump in, and we can come back to the doubling the ounces exploration. But let's talk about the metallurgy here, because as you say, and I appreciate, by the way, your candor and being very upfront about. You know, I don't have any sneaky questions now. You've been upfront about all the warts on the project.
Well, what I'm trying to do is set the scene here, because Ross and even the Chinese and everybody realizes that there's no point in doing a study on pre-treatment if you don't have enough ounces to spread that capital cost across.
Okay, so that's really the question. So, you know, what's different now? Why is this going to work now when previous?
Quite interestingly enough, the Chinese never put that million ounces into any category at all. They didn't do a technical report update. They actually put out the same year a PEA in 2012 without that beta. They did it on the previous million ounces. So since then, new technical report with the resources in it, half are measured and indicated, the other half are inferred. You might have seen that. There's lots of zones that are open-ended. I mean, the drilling can keep going here for many decades, I'm sure. But at some point, you have to address this situation. So we said to them, look, I'll update the PEA with add in that other million ounces. So we've got a 2 million ounce PEA. What are we going to do with this metallurgy? We have a mountain of beautiful work that was, most recent metallurgy was done in 2014. Our guy, Stacy Friedigman, is a famous metallurgical guy. He's not famous, but super well experienced, and he's well known in the community. He did set up the work at Skeena. They have refractory ore also with deleterious material, really, is the issue, and it's the same here. So we decided if we could quickly try a couple of things that were not around back in the day, not even 10 years ago. One of them is ultra-fine grinding. That was prohibitive cost. The last mine I built 12 years ago, we looked at that and it went outdoor as an option because it's too expensive. It's not anymore. That's a common thing now, the ultra-fine grinding. So you can liberate what you want from those or change the concentration ratios. Also gravity. Gravity's changed a lot in the last 10 years. For instance, a continuous Nelson concentrator now can actually, by gravity, separate different sulfide minerals, not just gold and diamonds like you might think. So we tried, you know, there's a great metallurgical lab in Kamloops, British Columbia, well known around the world. Had them do some quick tests, which in metallurgical tests are never quick because you got to do so many, you know, round and round and round, and then of course analyze everything and then go back to the drawing board again. So we did that, and we found out that we could come up with a little bit of a different concentration. Ultrafine grinding, we managed to get free gold and a native gold concentrate. We managed to put 19% of the gold by assay into a gravity concentrate. And that gravity concentrate runs about 3 ounces per ton. With the fine grinding, we also end up with a high silver content of over 1 kilo and over 1 ounce of gold in a lead concentrate. And then most importantly, we figured out how to separate out pyrite from the arsenopyrite. The iron pyrite has very minor amount of gold in it. So we thought, well, let's figure out how to get rid of that and see what we can do to upgrade the arsenopyrite concentrate. And like you commented earlier, we're wondering about the mass pull, because if the previous metallurgical work you ended up with one heck of a pile of arsenopyrite concentrate with a little bit of gold in it. So now, we've kind of found a sweet spot where the recovery in that concentrate will go down to around 70%, but we've chopped the amount of arsenopyrite in there by more than half.
Right, so you're processing less materials.
Excuse me for a minute. Yeah, so less material that you would have to ship if you found a buyer for it, or even run through your own POX plant. So I'm not sure exactly where the sweet spot is right now. We haven't done any optimization tests, but we've got it so we can play with that number. We've got it so that we can do this in a cost-efficient manner and have different products that we could sell and or process. So what we've done quickly is find out for sure we can make a lead concentrate. It's got about 1% arsenic in it. It's not it's not that pretty for guys, but smelters, at least in Asia and Europe, they want to buy it because it's got a lot of gold and silver in it. The lead concentrate. The zinc concentrate, we're sure we can clean that enough to sell it down the street here at Tech Cameco's smelter in the same river basin we're in. Zinc.
And this new metallurgy is in the PEA you just released. This updated metallurgy is in the new PEA that came out last month.
That's right. And it's not a lot of radical changes to that. The most radical thing is that we actually just decided to focus on a POX plant. And my board of directors and most people, we just thought that's not going to be that attractive of an option because of the cost. In the PEA, it turns out it's not as bad as we thought. Also, we need to be really environmentally friendly. POX is environmentally friendly. The residue, the arsenic residue, is turned into a metallic product that doesn't oxidize. It's not like an arsenide that you get after roasting that causes severe pollution. This scorodite metal, you can throw it in the creek and it doesn't oxidize. It's not going to do anything. So it's a user-friendly way of doing it. If I sell that concentrate to China or somebody like that, or they're going to have a product going up the stack, lots of gas full of arsenic. That's not a good thing. We have had some offers, but the penalties are high, and consequently the recovery of money is going to be low on that product after, and the shipping costs, etc. We've also, we had a pretty good offer from Polymetal was interested in Russia. They're enlarging POX plants there, and they're looking for third-party feed. But we're going to be making a lot of feed with a lot of ounces in it. It's fairly robust now at a few million ounces. So back up, look at doing our own POX plant for that arsenic-rich sulfide concentrate, which has the gold in it. There's not much silver.
Sorry, this is so important though. I don't want to beat this to death, but could you just characterize the level of the studies that we're talking about? Because usually people see a PEA and they assume that it's sort of, the met testing sort of generalities or something. It seems like in your case, you would have had to do some pretty specific test work. So this might be.
There has been a lot of old test work done that was not ultra old. This is 214 was the last work by very, very reputable people, and they've done a lot of work on that. And the basic works are all done. There's millions and millions of dollars worth of met work done on here. We're just checking out of the box a couple of things to make sure nobody was missing the boat. And it is important that as far back as Ross Beatty, their company had hired Bacon Donaldson, they'd also done some work on this to separate out the pyrite. And that's a huge thing. If you can do that either by flotation or by gravity, you're saving a lot of money in the POX plant or in the BioOx or whatever.
So why didn't other people go this route before, John? I mean, I understand what you're saying.
Because first of all, Ross had 700,000 ounces. That's it. So, and the cost of a POX plant then, and in those dollars, was almost double what it is now. The science wasn't the same back in the 80s. Not as good.
Okay. So actually, there's an advantage. sorry, there's an advantage for
You
it
know,
being a PEA, because in the PEA you can include the inferred. To, you know, do this in a feasibility
that's
study,
correct.
you have to do a lot of
Yeah.
drilling to bring it all up. Okay, that's
That's right. But when you take a look, Lobo, when you take a look at the peer comparisons, you'll notice that most of them for 2 million ounces did a minimum of 500,000 meters of drilling and a maximum of in the case of pure gold, I think they've done 100 kilometers there. Sorry, million. It's quite phenomenal. We've done 40,000, not we, but the previous guys did 40,000 meters to get 2 million in all categories. That tells you that the geology of this deposit is different than broken up, faulted lateral quartz veins and that kind of thing that are hard to put a resource together on. This tells you it's not that hard. 40,000 meters, 2 million ounces is about 10 times.
The overall change here, if I'm getting this right, is where the trade-off is lower recoveries but much lower costs, and amortized over the larger deposit. That's what
we're going to go the POX route because we want high recoveries. We want to pour gold bars on the property. We don't want shipping costs of a concentrate. We don't want penalties of a dirty concentrate. And PEA wise, going back to your question there, yeah, we've done a little bit of work, which you would usually do for a PA on the metallurgical side, until you get to the pre-feasibility side. On this program now, we're going to do some variability testing, which you wouldn't do on a PEA scale either, but we're going to do that through the 1.5 kilometers of the area that we're currently drilling underground. We'll take some more rock for more met tests for variability testing. And no, we're not going to do a pre-feasibility. We're going to update the PEA if we ever do anything. The main object of our drilling on this is to determine the size of this zone. It's not to put together more resources necessarily at this point.
Well, actually, let's talk about that. I mean, I'm assuming from what you've said, I mean, you're not going to rush out and build this mine tomorrow. The object of the PEA is to show the world, look, yes, it's refractory. Yes, the grade is modest, but we've solved this problem, and this is worth bothering. Because before, if nobody cared, or if they thought that the ore wasn't going to pay, then it didn't matter how big it got. Now you've outlined a case that says it may pay, and so is not the next logical thing to go ahead and make it bigger and focus?
That's right. Yeah. So we've, if you look at the PA news release or even the hard copy that'll come out in a few weeks, there's no fluff built in there at all. There's no stretch. There's no, we put together a pretty, we haven't tried to nickel and dime that thing at all, and it still came out better than we thought. It's pretty impressive at $1,500 and something gold. It's very good. Considering what.
Sorry, let me just ask about that. That was the question I had. How much of the value is in the gold? I mean, there's a lot of lead and zinc in there too. How much of the value is in the gold and versus the base metals?
Well, as you probably noticed, I mean, even on the back of an envelope, more than half of it is gold.
Okay.
Much more, yeah. And we also have other zones on the property. We have a silver zinc zone that has no metallurgical issues of any kind, and its net smelter is about $400. It's pretty good rock. And
I saw that. That's still refractory though, isn't it? Nope. I thought the silver zone, I thought it was also needed POX treatment.
Nope. The yellow jacket zone is super clean concentrates, and they can all be sold at trail smelter.
Okay. All right, but
we haven't focused on that because it's not a gold target. If you know what I mean, it's like raising money right now. Everybody wants the word gold to be front and center.
Understood. All right. Okay, so I interrupted you.
No, that's fine. So we've taken the most expensive plant that you could build to get the best recoveries and plunked that into the PEA and said, lo and behold, we can make a lot of money off of this grade of rock with a normal industry standard mining techniques and off-the-shelf equipment.
All right. And so for 2021, is the objective, I mean, you've already said you're going to continue de-risking that with more technical work on the engineering side. But from your presentation, I gather you're doing the down dip and up testing of the main zones. You have regional targets as well. How
Yeah.
much of the size potential are you going to test this year?
Well, we're going to jump around a little bit. We're going to do the first sort of 8,000 plus meters underground. We're continuing in and around where we did last year's drilling. And of course, that works great in the winter. So we're underground right now doing 8,000 meters in down dip and up dip of the existing 2 million ounces. So we're going to add to that. And we already have seen that. We, of course, don't know.
You need to wave your arms when you say that. But John, if you say we're going to add to it, you need to. Yeah.
And then in the spring, we're going to be doing some step out work to the north. There's 1.5 kilometers we know, which has both that zinc silver zone and parallel to the gold zone. We'll drill that from the surface, and it's low elevation. We can get at that pretty quickly in the spring. And then as the snow melts, we'll be stepping out as far as 5 kilometers away to the north and 2.5 to the south on the main trend.
Yep.
And there's a parallel zone called the A&E, which is gold rich also. So, but it's high up. So, yeah, summer.
I was wondering about that. I saw the yellow jacket on the map. I didn't understand it had different, such different metallurgy. But A&E and Roseberry, is there any drilling in those targets, or is that just surface samples? I wasn't clear.
The A&E's got about 300 feet of drilling on it by some old timers from the underground, and that's it on that whole mountain. So
and the theory is it's a similar target there. Is it the same one offset by a fault or something, or what's
the Roseberry is as such on the same zone as the main zone at Revel Ridge, only 5 kilometers. The A&E is a parallel zone. We're not sure why, or if it's another structure, or well, it is another structure, but we're not sure how it's related.
All right.
Parallel. We've got a permit application in for surface drill pads, helicopter access, 46 drill pads scattered over 8 kilometers.
And how much of that will you be testing this year?
Probably about 15 or 20 of those maximum. A lot of it depends on weather and success and that kind of thing.
Sure. And overall, of the budget for this year, how much of it is going into this exploration and how much of it is going into engineering?
In and around the main zone right now, it'll be about half the budget, drilling budget. Mm-hmm. And then the other half will be surface targets, which will be riskier targets, bigger step outs. Yeah.
Okay, and how does that overall drilling budget compare to the engineering budget in advancing the project in hand?
Yeah, so the metallurgical work and permitting, we're going to be doing some permitting to de-risk that also, because as you know, having resources in the ground is a lot different than having some you can sell, especially in Canada. So we, and one of our team's expertise is permitting. That's something we're good at, and we have a lot of good people who are able to do that for us.
Sure. You mentioned earlier, and I was wondering about First Nations. Is it one band that you get to deal with, or are there any conflicting land claims there? That's always a concern in that part of the world. If there are any conflicting First Nation.
There is, yeah. There's 3 First Nation groups made up of about 8 bands. And they're all trying to get this valley because this valley was vacated by a First Nation back in the 50s when they built about 4 hydro dams between the U.S. and north of where I'm sitting, and the main remnants of a quite famous native band ended up moving south across the border onto a reservation there in the 50s. The Canadian government declared them extinct. There's a void here, and as you can imagine, this valley's got good recreation, lakes, streams, ski areas. It's got highways and railways. It's got all of a sudden a bunch of hydro dams pumping out electricity. Guess what? It's valuable land, and it's in demand. Various First Nations would love to occupy that. One of the more powerful groups in the area that I won't name right now is somebody I've worked with on numerous projects in the past, including production, and they're the only ones that stepped up to the plate when we got a waste discharge permit here, which, by the way, is the first time in the history of this project there's a waste discharge permit for water coming from the underground. So we've got that from the Ministry of Environment, nothing to do with the Ministry of Mines, even though it was done in concert. And the First Nation wanted to see that, and we accommodated that. And we had the Ministry of Environment regulators up in the town of Smithers in northern British Columbia help us with that, because they know all about underground mining, and the other Ministry of Environment people near us don't. So they were very helpful, and we managed to get that permit done and get the go-ahead from the First Nations to do this drilling. That, of course, is not a production
Sure,
permit,
but it's
anything, but
it's good to have an early indication of cooperation. And
yeah.
I was specifically wondering.
Well, we do need to be clear here that there's a lot of work to be done on that, but we've gone down that path before, all the way to production, and a couple of times in this valley.
Understood. As the specific, it seems to me there's a potential time crunch here. There's a specific issue in that you have a delicate social issue to manage to advance. And I'm not saying it can't be done, but it is, a process that needs to be handled carefully. But you also have really significant payments, property payments to Huacan, or
Absolutely.
however you pronounce that. It's mostly back-ended, but it's yearly anniversaries, and they step up. I mean, I'm not sure
Every
if
year.
you paid that next million yet, and the next one's 4 million. And so if the project's going slowly, how do you balance that? Or are you sure enough right now that you would pay $44 million for what you have in hand?
Absolutely. That's not even the out-of-pocket cost. That's not the out-of-pocket cost. And it's certainly not anywhere near what the value of 2 million ounces is, even if it's an equivalent number. Yeah. And this thing is wide open, wide open.
I get that your NPV is greater than, let me rephrase it, being a little obnoxious here, but
that's fine.
Would you anticipate having any difficulty raising the money to come up with those property payments if the project is proceeding slowly?
I'm sure, depending on the markets, there's going to be times where it'll be difficult. But I'm sure that between now and then, we'll have added a lot of value to the property. And when you need to renegotiate something with the vendor who has no interest of any kind in any value add on the property, he might be interested in getting some of that down the road. I, of course, would say, well, maybe, but that'll be out of production. It's not going to be out of my pocket. You need to remember, we did a deal with these guys. All they needed was to get their money back. They couldn't go back to China without their money back.
Right. I understand.
So there's no royalties.
I do get the advantage to a cash deal, which leaves the project unencumbered instead of royalties and hedges.
Yeah, unencumbered.
I do understand that, but it just struck me like, wow, that's a lot of cash.
Oh yeah, it's huge. I mean, when I sold that option to Vizsla in Mexico, I handed them a $40 million US option in 5 years too, and that was you can choke on that pretty good. But same thing, power lines, roads, 75 miles of veins. I mean, what do you get for your money is the big question.
Yeah, well, they sure have. They sure have pleased the market well out of the gate. But another conversation. Okay, we won't beat that to death. But there was one.
We need to understand that you're absolutely correct. It's not cheap.
But I have one more question about it, John, and that is there is something in there about an option to buy shares instead. Is it? I wasn't clear on what that.
Yeah. So the Canadian company that they have, which is Huacan International, is owned by a Chinese parent company and a few other high net worth guys in China. That once we've exercised the option, we can also take the Canadian company. And that Canadian company has a bunch of tax losses in it. So they'll happily transfer that
okay.
Canadian company to us.
So for the cash, you get the project. If you want to take, and all right, okay. I saw the $38 million in tax consideration on the slide. That looked interesting. But that's, and is there any sunset on that? Would that last long enough if it takes some years to?
Well, there is on the tax loss and the tax credits, but our accountant, I think it's about 8 years where they start to wear thin, and then they go on for about another 20. So we should be able to get advantage of that, take advantage of that.
All right. Okay.
And I can't really transfer that. I mean, I can't, like if we took on another cash producing or rather income producing operation with our company, then we could use it for that also.
All right. Understood.
Mining.
Let's come back to focus on 2021. All right. So I'm very impressed by the PEA. I was surprised when I saw the grade, and it was some time ago that this first came up on my radar, and I saw the grade and I thought, oh, that's never going to work. and then your PEA, I was really surprised. 29.5% IRR is more than I would have expected. Sounds like it was more than you expected. But I understand the logic of how you got here. So where do we go now? We talked about exploration. We talked about more metallurgy. What is the budget for this year, and what are the deliverables?
Yeah, so the budget for this year is $9 million of drilling and other work, and that includes the overhead. We've got $1 million payment to make on February 25th. We've got money for that, still in the bank from the last financing that we did. We've got about $6 or $7 million in warrants out there that are in the money now that likely might be exercised before we get to needing any more funds later on towards the third quarter. And we're in good shape. We have 10 million cash in the bank right now.
All right. So 2021 is covered. We have,
and we have some shareholders who are just all day long. They're happy that we're doing what we're doing, which is to increase the size potential of the project. Try not to focus too much on thinking about production right now. It's about adding ounces, I think.
All right.
Yeah.
Understood. I get it. So, and this would be a very different conversation without that PEA.
Well, Lobo, there'd be no reason to go and drill another, pick a number, 20,000 meters if there was no hope to be able to go down the preferred route and justify that. So I think we've shown that even without trying too hard, we've justified it. So let's get back to what we do best, which is push on that permit button, because I want to see it really close. A lot of suitors who want to come into these deals, that's their main concern is, well, what's going to happen when we need to put this into production? How are you going to get those permits? So let's show them right now. That's not going to be fast either. And let's get a whole pile of drill core being analyzed as soon as we can.
All right. You mentioned to me before we started talking that you're on site now. You're there at the project. What are you working on today?
What am I? Well, I do a few things. I run the company and I'm actually the mine manager. And you have to have a technical mine manager because you can't get a permit without one. So I've got the drill is going underground. We have all the equipment, 100 horsepower fans, pumping in air. We have 500 horsepower generators, putting all the electrical in for that. And we have snow plows going, and we have people down there logging core and taking samples right now. And then I'm going to be going to Vancouver in a few days and doing some work down there. But this is thanks to technology, and that's another thing that has changed. You can operate pretty much anywhere. We have a crummy little satellite dish scabbed onto the old building that we're in, and works fine.
Absolutely. I run my publishing empire here from San Juan, Puerto Rico.
Yeah.
I understand.
So we've got two houses. We have one where the drillers are in and one where the rest of the crew is in, and we have a real heavy duty procedure for COVID. The little town we're close is not, hasn't escaped that. So we have to be very careful. We don't want anybody catching it or we'll be shut down for a few weeks, which would be a lot of damage to the project, the people, the stock, you name it. So.
Understood. But that makes
How
me
is it there?
several stories, but I'm not going to go there. All right. But you've done a really good job giving us an overview and letting us know what's coming up next. I know what to look for. And just to be clear, you have drills turning now. So there are results pending. Presumably you release them in batches.
Lots of results, yeah.
So we have results pending. Okay, we'll look forward to that. Well, John, the one question I like to always make sure I ask everybody before I let them off the hook here is the old skin in the game question. I mean, we have an audience out there. You'd like them to invest in your company with their hard-earned money. How much of your own cash have you put into this deal?
Well, I tend to recalculate it regularly, especially after I rolled the company back 5-for-1. So my break even right now is about 80 cents a share on what I put in. And so of course I always, we started this company about 10 years ago. So, it was kept alive predominantly with my credit cards over a period of about 5 years. So lots of skin in the game and millions of dollars.
Well, you must have been excited towards the end of December. The share price spiked and you got close to break even.
Well, there was, we have a beautiful zinc project that we don't talk about down actually south of here, halfway to that smelter. We haven't drilled a hole in it yet because, by the time we got it put together, the zinc market had faded post 216. But that's a big asset and it's got a new discovery on it made by Teck. And
I did notice that you had several other projects in the portfolio, but all your presentation is about Revel Ridge. So I figure that's really your main focus.
Revel Ridge, that's what we're going to get all the money for here in the short term. So that's the big focus right now.
Understood. All right. Well, thank you very much. You've been a good sport for some tough questions. I appreciate you sitting still for that. Good luck and keep us posted on how you do.
Yeah. I will, and good luck to you too. And keep yourself out of trouble and keep safe too. So.
I'll try. Thank you.
Okay, you're welcome.
Thank you for watching this edition of In the Pit with Lobo Tigre. If you enjoyed or found value in what you just saw, and you're watching this on any sort of social media, please do hit the like button and the share link. Send this on to anybody you think might be interested. That helps us out a lot. If you're watching this on YouTube, please do hit the subscribe button as well. The number of subscribers helps us get more valuable content to you as well. On the subject of subscribing, I'll quickly say that if you're not a subscriber to our free weekly Speculators Digest, I encourage you to sign up. I promise if you do, we will not send you a flood of daily advertisements. You get one free weekly digest with original research not published anywhere else. Check it out at independentspeculator.com. Thank you and have a great day.